Salesforce just reported something remarkable. Their new AI product Agentforce went from zero to over $500 million in annual recurring revenue in just one quarter. That's a 330% year-over-year explosion. And they've already processed over 3 trillion AI tokens through their platform. This is the fastest product ramp in Salesforce history. In today's video, we're analyzing Salesforce's third quarter fiscal 2026 results. We'll examine first the strong top-line growth driven by Agentforce and Data 360. Second, how margins expanded to record levels while returning over $4 billion to shareholders. Third, what management's guidance tells us about the business trajectory. And finally, the Informatica acquisition and what it means for the platform. Let's dive in. Here's what caught my attention. Salesforce grew revenue 9%, but their current remaining performance obligation accelerated to 11% growth. That gap tells us something important about future quarters. Third quarter revenue came in at $10.3 billion, up 9% compared to last year, or 8% in constant currency. That $60 million foreign exchange headwind was relatively modest. Subscription and support revenue, which is the core business, reached $9.7 billion, growing 10% year-over-year and 9% in constant currency. Professional services added another $533 million. The company raised full-year guidance to $41.5 billion at the midpoint, representing. Now, let's talk about what's really driving this business. Agentforce and Data 360 combined hit nearly $1.4 billion in annual recurring revenue, up 114% year-over-year. That's explosive growth. Agentforce alone surpassed $500 million in quarterly ARR, growing 330%. They've closed over 18,000 Agentforce deals since launch, with over 9,000 paid deals. That's 50% growth quarter over quarter. And here's the key metric. Not all product lines are growing equally. While some legacy offerings slowed down, one segment is absolutely crushing it. Let's break down the portfolio. Looking at subscription revenue by product line, Agentforce sales generated $2.3 billion, up 8% in constant currency. Agentforce service delivered $2.5 billion, also up 8%. Here's where it gets interesting. Agentforce 360 platform, Slack, and other reached $2.2 billion, growing 19%. That's the fastest growth in the portfolio. Marketing and commerce slowed to just 1% growth at $1.4 billion. And integration and analytics. Geographically, Americas delivered $6.7 billion in revenue, growing 8% in constant currency. That's the anchor. Europe contributed $2.5 billion, up 7%, solid but not spectacular. Asia Pacific was the standout at $1.1 billion, growing 11% in constant currency. North America, France, and the UK led regional bookings growth. The geographic mix remains heavily weighted to Americas at about 65% of total revenue. Here's what impressed me most. Salesforce expanded operating margins by 240 basis points while simultaneously returning over $4 billion to shareholders. How did they pull that off? GAAP operating margin hit 21%, up from 20% last year. But the non-GAAP story is even better. 35.5%, up from 33%. That's 240 basis points of expansion. Gross margin remained stable at 78%. The leverage came from operating expenses. Sales and marketing as a percentage of revenue dropped from 30% to 29%. Research and development held at 11%. General and administrative improved from 7% to 6%. GAAP net income reached $2.1 billion, translating to $2.19 per share on a diluted basis. That compares to $1.58 last year. Non-GAAP earnings came in at $3.25 per share, beating expectations and up from $2.41. The company benefited from $263 million in gains on strategic investments this quarter. For the full year, they're now guiding to non-GAAP earnings of $11.75 to $11.77 per share, up from prior guidance. Salesforce generated over $2 billion in free cash flow this quarter. But what they did with that cash is equally important. Operating cash flow came in at $2.3 billion, up 17% year-over-year. After capital expenditures of $139 million, free cash flow reached $2.2 billion, up 22%. Year-to-date operating cash flow totals $9.5 billion, growing 11%. Free cash flow for the 9 months hit $9.1 billion. The company raised full-year cash flow growth guidance to 13% to 14%. They're converting earnings to cash. Capital allocation remains aggressive. In the third quarter alone, Salesforce returned $4.2 billion to shareholders. That breaks down to $3.8 billion in share repurchases and nearly $400 million in dividends. Year to date, they've repurchased $8.7 billion in stock and paid out $1.2 billion in dividends. Since inception of their $50 billion buyback authorization, they've now repurchased $28 billion. The share count is down 13 million year over year, or about 1%. Current remaining performance obligation hit $29.4 billion, up 11%. But there's another metric that matters even more for predicting future quarters. Total remaining performance obligation reached $59.5 billion, up 12% year over year. That's contracted revenue not yet recognized. Current RPO, which converts to revenue within 12 months, grew 11% in both reported and constant currency terms. Foreign exchange was actually a $200 million tailwind this quarter. The acceleration in cRPO growth from 10% last quarter to 11% signals strengthening demand. For Q4, management guides to approximately 15%. Salesforce closed the Informatica acquisition on November 18th. This brings data cataloging, integration, governance, quality, and master data management capabilities to the platform. For Q4, management guides to revenue of $11.1 to $11.2 billion, representing 11 to 12% growth. That includes approximately 3 percentage points from Informatica. Full-year revenue guidance of $41.5 billion at the midpoint includes about 80 basis points. Let me summarize the key points. First, Salesforce delivered 9% revenue growth with 11% cRPO growth, signaling acceleration ahead. Second, Agentforce is ramping faster than any product in company history, already surpassing $500 million in quarterly ARR with over 9,000 paid customers. Third, they expanded non-GAAP operating margins to 35.5% while returning $4.2 billion to shareholders this quarter alone. Fourth, if you found this analysis helpful, please subscribe to stay updated on quarterly earnings coverage. Damn bullshit. This material is for educational purposes only and does not constitute investment advice. Investing in stocks carries the risk of capital loss. Always consult with a financial advisor before making investment decisions. Thanks for watching.